It's no secret that FHA loans have been making home ownership more affordable for decades. Tailored to homebuyers with lower credit, FHA makes it possible to buy a house with a 580 credit score and just 3.5% down. Because of this, FHA loans are a great option for first-time homebuyers. In fact, this is what I used to buy my first home back in 2018. So today, we're going to talk about the requirements of the FHA loan, of course, how FHA loans work, and the pros and cons. So let's get right into it. So what is an FHA loan? An FHA loan is a mortgage insured by the Federal Housing Administration, or FHA. Now, it's not FHA actually giving you the money. FHA insurance protects mortgage lenders, the people that actually give you the money, allowing them to offer you low interest rates, easier credit requirements, and low down payments starting at just that 3.5%, which is a lot more attainable than a 10% or 20% down payment. Now, with this loan, just like all the others, of course, there are some requirements. So you would need at least a 3.5% down payment with a 580 credit score or higher. Of course, like you've heard me talk about before, the higher your credit score, the better borrowing terms you are going to get. Most other loan types are going to look for a credit score of around 620 or higher. So with FHA loans starting at a minimum of a 580 credit score, this does open up an additional opportunity. Now, if your credit score currently sits below a 580, let's say between that 500 to 579 range, don't automatically rule an FHA loan out. There is a possibility for you if you have at least 10% that you can put down. With an FHA loan, you would have to have a DTI or debt to income ratio of 50% or less. Now, conventional loans, on the other hand, would typically max out their DTI at 43%. So if you have a lot of debt, you're debt heavy with student loans, credit cards, car loans, all of that, an FHA loan might work for you. Now, if you need to figure out your debt to income ratio, click the video up here and I will explain how you can figure out yours. Additionally, in order to qualify for this loan, you would need to have steady income and employment history. Keep in mind that that means 2 years in business if you are self-employed. Additionally, FHA loans can only be used for a home that you plan on using as your primary residence. So this cannot be used for something that you are going to buy and immediately use as an investment property, let's say, or a second home. Has to be your primary residence. So how do FHA loans work? FHA, like I talked about, doesn't actually lend you the money. You get an FHA loan from an FHA approved bank or lender, just like you would any other type of home loan. So this does make the process even easier because you're not having to work with a government agency to get this loan. The reason that it's called an FHA loan is because FHA does insure the loans, which offers lenders protection in case a home buyer can't pay their loan back. This comes into play because keep in mind that with catering to specific people who might have a higher debt to income ratio, may have a little bit of a lower credit score, lenders take more risk to give you the money. So this insurance, essentially, by FHA allows them to take that risk or encourages them to do so. Now, with this loan type, there are some pros. The first thing is the low down payment. Besides a VA or USDA loan, which you obviously have to be a veteran or active duty for, or for USDA, you'd have to buy in a rural area, an FHA loan does pretty much universally offer the lowest down payment possible. Now, additionally with this, if you don't have the down payment fully, gift funds are allowed. So if you have a friend, a family member who wants to contribute to your down payment or your closing costs, that is allowed with an FHA loan. So don't automatically rule it out if you don't have the cash to cover everything, but you have someone who's willing to help. And they allow this up to 100%. Essentially, all your funds could come from someone else if you have someone willing to give you the money. Wouldn't that be nice? Like we talked about, they do allow the higher debt to income ratio as well, lower credit scores, and sizable loan amounts. The maximum loan amount for an FHA ranges from $472,000 all the way up to $1,089,300. Now, the range here differs based on your location and the cost of real estate, cost of homes to buy. So I would say, like in my market, it is $472,000. It is not high. But if you were to go to San Diego and try to use an FHA loan, you would obviously get like the most money possible, because there you can buy a shack for like $1 million. I was just in San Diego last week, and woo, those prices be expensive. It really makes me wish that I could just pick up my house in Arkansas and like move it and just have it be worth more money. Now, you know, I love multifamily as an investment. The cool thing about FHA loans is that you are allowed to purchase multifamily properties. I love this so much because, I mean, we're even building a duplex 2 stories down from our current house because of the potential for passive income through renting out additional units. Now, with this, keep in mind, if you purchase a multifamily, it can only be a 1 to 4 unit structure. So nothing more than a 4 unit structure can go FHA. If you want to buy an 8 unit apartment complex, it's not going to fly. But you can buy single family, duplex, triplex, fourplex. Now, with this, you still do, since this is an FHA loan, have to move in and make one of those units, if you buy a multifamily, your primary residence. So keep that in mind. If you buy FHA and you're like, I'm gonna house hack this, more power to you. I love it. Offset your mortgage with a rental unit in the same building is a great way to beat inflation. If you want a whole video on that, let me know in the comments below. I would love to make a video about using an FHA and buying multifamily and house hacking your way through life. But just to keep it short on this, make sure that you have plans to live in one unit if you are going to do that. Another pro of the FHA loan is that you have the ability to refinance, so that will allow you to shift around your borrowing terms. And after 6 months and on-time payments, you even get a streamlined refinance opportunity to where you can potentially lower your interest rate without like a whole new appraisal and new fees. Of course, cons come with the territory. If you don't have the money to buy a house cash and you are financing a house, there are going to be some cons, because you're going to have to pay some additional money to have access to the money to buy the house. So with an FHA loan, you are going to have something called private mortgage insurance, PMI. That is going to be on the loan for the life of the loan. It never drops off. So your upfront mortgage insurance premium is going to be 1.75% of the total loan amount. So this is paid at closing. This is something that is not grouped into your mortgage payment. Then you're going to have your normal MIP, and this is going to be 0.55% of the loan amount. And this is an annual premium that you pay monthly as part of your mortgage payment. Now, this is a good thing. This 0.55% just got reduced. It used to be like 0.85%, which means that you were paying more in mortgage insurance a few months ago than now. So this is good. This is getting better for borrowers, because obviously affordability is an issue. So just know that PMI does not drop off like it can on a conventional loan. It is on for the life of the loan. Now, with FHA loans, also, if you are looking to buy a condo, many condos are not approved to go FHA. So just keep that on your radar. It's not impossible to find them, but FHA has certain rules. The condos have to be approved FHA ahead of time, and they just oftentimes aren't. So if you're buying a condo, know that that might be something that should be looked into, or maybe if you're looking at a condo, you specifically want that, look into something like a conventional loan. Just to reiterate, FHA loans are only available on your primary residence. With this, let me know what questions you guys have about FHA loans. I know that was kind of just a brief overview, but I feel like it really gives you the basics of what you need to know without diving into too much like lender talk, lender jargon. If you feel like you are meeting most of these criteria, definitely reach out to my team. We are ready to help. In the description, you can book a 30-minute free pre-approval consultation call. This is the first step that I would recommend if you are toying with the idea of buying a house in 2023, because not only can we review your finances, talk with you about what the FHA loan might look like for you, but also we could identify some different loan types or different programs that might work best. Keep in mind, we also have a down payment assistance if you're having trouble coming up with just even that 3.5%. So it is definitely possible to buy a house in 2023, even if you are a little bit cash strapped. Let me know what comments you have in the comment section below. If this video was helpful to you, smash that like button. Make sure you are subscribed. I'm Nicole Nark, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.